Welcome in, my name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video we have a jam-packed episode with a variety of different topics that we have to cover. Namely, the title of the video, Airbnb is expanding their business. They're going from this company that is, historically just used for vacation rentals to now offering a variety of different services. We're going to go through what those services are and what this could possibly mean for the future of Airbnb. Additionally, unless you've been living under a rock, UnitedHealth has been an absolute dumpster fire for the past 2 weeks or so. There's been a variety of different developments, namely they've been accused of committing fraud, the CEO has stepped down, and overall, there's been a bunch of negative developments with that company, and so we're going to quickly cover what's going on there. It's super investor season, and my favorite investor, Bill Ackman, his 13Fs came out for Q1 of 2024, and so now we are finally able to see that he did in fact purchase a massive $2.2 billion stake into Uber, right away making it his biggest position. And I have some interesting commentary around just Bill Ackman in general, but more so with Uber and the developments that are being made with that company. And then lastly, I actually had the honor of ringing the opening bell at the Toronto Stock Exchange. So at the end of the video, we'll kind of a little bit talk about that. So at the end of the video, we're going to talk a little bit about that and the experience overall and that type of stuff. So first, we're going to be covering Airbnb, but in order to kind of set the stage and get everybody on the same page, I'm going to actually use finchat.io, which is the world's greatest stock research platform, to kind of showcase to you guys the current state of Airbnb and how they're performing as a business overall. And so this is actually a perfect time to tell you that Finchat is the world's greatest stock research platform built for fundamental investors. The main differentiator of finchat.io compared to other stock research platforms is that not only are you able to pull in, for example, the income statement, balance sheet, cash flow statement, data, and obviously bring that in on a beautiful charting interface, but additionally, you're able to go over to the segments and KPIs tab, which aggregates over 2,000 different companies worth of data and brings in company-specific granular data. So for example, in the case of Airbnb, arguably the most important, maybe first or second most important KPI or key performance indicator that this company has is the total nights and experiences booked. As it kind of sounds like, this is exactly what it is. It's the total number of nights that people book on the Airbnb platform, which over the past 12 months was roughly 500 million nights booked. And so what I'm more interested in here is actually the percentage change of the total nights booked. And I'm actually going to click the last 12 months on this to really showcase to you guys the issue with Airbnb as it stands currently, which coming out of the pandemic, which we saw a massive boom in terms of travel, and particularly into 2021, into 2022, it was travel was just much stronger, even disproportionately to the 1 year that they missed in 2020. This was evidenced by not only Airbnb, but Booking.com and other companies within the same industry, airlines, all that type of stuff, right? And so I think you kind of have two things happening at the same time. One, Airbnb as a whole, as just as a business, is becoming more mature, and the law of large numbers is kind of creeping up to them, where obviously, 20% growth on 100 million nights is much easier than pulling the same amount of growth later on like multiple hundreds of millions. I'm not sure that's proper English, but multiple hundred millions of nights, right? So you have one problem. You have that problem of just, the number is becoming increasingly big. They can't grow at 20% forever. But then you have the other problem of, I think there was a pull forward. There was like a boom in travel. And so that as a whole has kind of died down in recent times. And it's evidenced by the chart, right? You have the total nights and experiences booked. This is the growth of it. And you're seeing it lockstep quarter after quarter over the past, call it 3-4 years or so. It has continued to slow down. And actually, if we look at it on a quarterly view, you'll see that we saw the lowest growth rate quarter in the most recent quarter, coming in at 7.9% year-over-year growth. And of course, being the main sort of method in which Airbnb makes money, if the total number of nights that are being booked is continuing to deaccelerate, the growth of that is continuing to deaccelerate, that's going to go over to the total revenue growth. And again, that's also evidenced by the lowest revenue growth rate, I believe, in the company's history, taking out COVID, because that was like a negative revenue period, right? But 6% growth this is becoming a very mature business, right? I'm pretty sure Coca-Cola grows at like 3-4% revenue per year, right? And of course, travel's cyclical and there's a lot of different things that go into it. I'm not saying they're going to stay at 6% forever, and Q1 admittedly is probably a very weak quarter. So there's a lot of different things that kind of go into that number. Point still stands. The trend is not in your favor here. It has continued to deaccelerate. And I say all that to kind of prep us for the pivot that Airbnb seems to be making. So traditionally, the core offering of the business, vacation rentals, is a very fragmented business, and Airbnb kind of serves as like a demand aggregator of this fragmented supply of vacation rentals, right? And so I want you to keep that in mind as we go through the list of the new services that they have launched. And by the way, when this first came out, I kind of knocked it right away, but I didn't realize that it's actually supposed to be used, these services are supposed to be used locally. So it's not like you're on your Airbnb trip and then all of a sudden you pull up your phone and you go get your nails done. So without further ado, let's just quickly go through these. These are the 10 new categories that they are opening up in a select number of cities. One of them, it happens to be Toronto. So actually I didn't book anything, but I was playing around on the app and it seems interesting, right? So first one, chefs. You can book chefs off of Airbnb to come to your house and cook you a meal. Photography, massage, spa treatments, personal training, hair. So maybe that encompasses getting a haircut and everything in between. Makeup, nails, prepared meals, and catering. Short list of 10 items that Airbnb is launching. And again, I want you to think about this, right? It's a fragmented market of, for example, I think the clearest example of this is a photographer, where photography in general, like if you wanted to get a photographer for a wedding or whatever the case is, odds are you're going to go Google it and like you're going to look at some Google reviews and that type of stuff. So they're kind of playing this game of increasing the number of fragmented services and markets that they're able to serve. And what I find most interesting out of this is that historically, Airbnb, the core product, is a very low frequency item, right? Odds are the average Airbnb user maybe uses it twice per year. I'm sure there's some power users out there where you guys, especially you guys in Europe, you're booking Airbnbs left and right. But, you know, most people, their interaction with Airbnb is their interaction with vacation. They book once or twice per year. And so if you look across these categories they're launching, I think they've realized it's more powerful to have a low ticket, high frequency item, something, for example, like Uber, where, you know, you get your haircut done, every 3-4 weeks. You get some of these other ones, maybe less so, but you look across these categories, they're definitely higher frequency than something like, for example, a vacation rental. So I think they've realized that it's an easier and better business model to get to scale. And there's a lot of other built-in advantages that comes with that increased amount of scale. Having it higher frequency, you could build loyalty programs around it, maybe like a subscription, something like Uber One that Uber has done, right? So I think that's like sort of their long-term thinking. Maybe they haven't fully fleshed out all the details, but they're definitely thinking about like it opens the door to a lot of those things that I just kind of mentioned, right? So overall, I think it's fine. I think it makes sense. It's definitely an interesting pivot. I actually tweeted about what I expected were sort of the things that they would do. I was thinking that they would really lean into sort of the adjacencies that they already have with the core business. So, you know, you could do everything that has to do with your trip. So it would be like flights. It would be excursions. Once you've actually made it to like Santorini, you don't know the local people there. Let's say you wanted to go on an excursion. Where do you realistically book that? So Airbnb would kind of centralize that and then build the supply base around that. So I was thinking it would be stuff like that. Maybe they would add hotels. Maybe they would add, I was thinking like even something like limousines, right? Like, or like just like luxury vehicles. Like in order to do that, you have to kind of go through, at least in Canada, what we have is Turo. I'm not sure if you guys have it elsewhere, but I was thinking like that's a very natural adjacency. I'm sure a large percentage of people traveling with Airbnb, they would like to rent luxury vehicles or they would like to rent limousines. Anyways, definitely an interesting pivot, but remains to be seen. I should also mention the CFO outright, or was it this? Yeah, I'm pretty sure it was the CFO. He just outright said, we don't expect this to be a material revenue add for us in 2025, but we'll see on a going forward basis, whatever. So definitely a small business for now, but I think it could definitely have interesting option potential in the future. And you could start to imagine like, oh, you know, we're going to lean into like all these other fragmented categories. Like you could, you know, start to imagine like dentists going on Airbnb, right? Like you need a dentist in your local area and you book through there, or like nail salons and like all these other things, right? So lots of optionality in terms of that fragmented supply base coming into a centralized demand aggregator. Admittedly, they're fighting with like Google on that front as well, right? Moving on, because I think we've spent way too much time on this, but UnitedHealth Group has been a dumpster fire. There's no other way to put it. So for those of you not following, first of all, if you don't know what the company is, this is the biggest health insurance company within the United States. They've had a series of unfortunate events happen to them. Firstly, they, I guess, missed on their quarterly earnings a couple of weeks back, and there's something called the MCR ratio, which essentially shows you of all the money that you've collected, how much of it are you paying out or how much of it you're keeping, something like that. And so for them, they were keeping about 15% of that. And so they came out and they essentially, to my understanding, I think they pulled the guidance on that and just said, we have no idea what the MCR ratio is going to be in the future or for 2025, but we remain confident that in the long term, it'll be okay. Stock drops 25%. Then Trump comes out and he says it's not going to go through, but like, he's like, yeah, we're thinking about how in other countries, the same drug costs like $80, but then in America it costs $1,500. How does that even make sense? And so I think that, I'm not sure the exact logistics of it, but I think the fact that he's like leaning into the healthcare industry and that type of stuff is going to adversely affect them. And so the stock kind of dropped off of that. But then what really made the stock drop, I think it dropped another 20%, was the CEO randomly steps down and they also pull their just full year guidance. They just it wasn't on an earnings, but they fully pull their guidance and say, we have no idea what, in terms of revenues, EPS, anything like that, we have no idea what we're going to do this year. Cherry on top, the story doesn't end there. I think maybe the day after or something like that, and it might be fake, I haven't looked into it too much, but the DOJ or something like that is accusing them of fraud, and they've started an investigation. Stock drops like 8% after hours. And it's just been, yeah, as you can see in the screenshot here, it was down 7% in after hours on the day that happened, right? And so a lot of people were citing that this is a 12 PE, you got to buy the dip. One guy in particular, who shall not be named, was saying if you liked it at 450 and now you're not buying at 300, you're not a real investor, this and that, just all this stuff, right? The issue is, there's a couple issues with this, but number one is the valuation that you're citing is off of a $26 earnings per share in 2025. And people are like, oh, it's a 12 PE. It's so unbelievably cheap. It's going to bounce back, this and that, whatever. Too big to fail, all this stuff. At least in the immediate term, the PE that you're citing is not going to come true, right? Like you're looking at this on a 12.4 PE. What if they come in at like $15 of EPS this year, right? All of a sudden the PE equation massively changes. You thought you were buying in at a 12.4 PE. Turns out it's like a 24 PE, right? So that's the immediate term. Number two is this business, from the little research that I did on it, seems so unbelievably complicated. I'm not sure even if you're, like somebody in the US who's been using the health insurance system all your life and all this type of stuff would even get comfortable with understanding the inner work. It seems like, to me at least, it's kind of like the banks. Like I'm never going to understand the inner workings of these banks. They seem so opaque and it's like a black box. Like you have no idea what the underlying anything is, how their operations are, none of that. No amount of interviews by the CEO is going to catch you up on their business strategy, right? And then obviously they're like prone to regulation. So just overall, I look at this business and I just think to myself, what's worth the headache? Like even if you're buying the dip at this point, maybe it turns around, maybe it runs 100%. But like maybe worry about your downside. They're being accused of fraud. They have all these other reasons. The CEO doesn't randomly just jump ship, not even jump ship, but just randomly step down. Like there's a lot of red flags going on here, right? So that's kind of what I was thinking about it. There's a decent chance that, all of this is just complete garbage and there was no issues all along. A year and a half, 2 years down the line, they run their business like normal, no problem. But like, is it really worth the headache? You could just pay up in valuation a little bit more, buy something like, for example, Google, which that's maybe another battleground stock, but at least they're not being accused of fraud. Moving on, my favorite investor, Bill Ackman, which he gets a lot of flack because he did the new Howard Holdings group thing where, if you don't know, by the way, he said he's going to buy Howard Holdings Group or whatever it's called, Howard Hughes Holdings. Jesus. I'm just going to say Triple H from now on. But he's going to buy that company and then he's going to turn it into like a mini Berkshire, and he's going to start buying assets and essentially do what Berkshire's done. The issue is, I think he's charging like a 1% management fee or something, like a 1.5% management fee, which if you know Buffett at all, he's notorious for hating the management fee structure and that type of stuff. The whole reason he even bought a holding company effectively in Berkshire is to exactly avoid that, where if you want to be invested with us, you just buy the shares. Right? Like we don't charge you a fee, you just buy the shares. And so it's just completely counterintuitive to the structure and the legacy that Buffett has built. But anyways, he gets a lot of flack for his opinions and that type of stuff. But if you just focus on the pure investing side of things, I tend to like his moves and his wisdom that he shares with investing. With all that being said, in January, he announced that he bought Uber, and then Uber right away went up. And this is, again, I've only noticed this with like Buffett and Bill Ackman, but whenever Bill Ackman buys into something, the stock usually goes up. Same when Buffett buys into something. So he's one of those like very rare investors where I guess the markets kind of pick up on whatever he buys, they also buy into it. So in the case of Uber, I think it shot up like 10-15% in the span of like 2-3 days. And so as you can see, I believe he bought all of his shares right away at the start of January. So he bought in at about like $70 something per share and right away made it his biggest position at $2.2 billion of the portfolio. Now, if you're new to the channel or you haven't really kept up, Uber has been one of my main stocks that I've been pounding the table on for the past, since I think basically like mid-January. I think I invested in the company, and I've been pounding the table at, and it's done quite well for me now, like up until now, and I think it's going to do well in the future as well. So it's grown into my second biggest position. It's now bigger than Google for me. It's roughly a 20% position, and I continue to hold. I think it's still somewhat attractively valued, definitely nowhere near how undervalued it was at, like, you know, $65 a share when I first initially started my position, but I still think the stock is probably in the fair value range, somewhere around like $110 a share, roughly. So I continue to hold, but it's such a big position already, I'm not adding at the moment. And I did a video about this, which I think I'll try linking it at the end of the video, when Bill Ackman initially bought into the stock, of me like kind of talking about it and all that type of stuff. But I bought in before Bill Ackman bought, so if he pulls a Netflix on us here, it's not going to change my thesis if he sells out a quarter later or whatever the case may be. I'm going to continue to hold for now. There's no fundamental reasons that I believe that would lead me to believe that I should sell out of this company for now. And then additionally, one thing on Bill Ackman before we move on, it says here that he sold Nike. He just completely sold out Nike. He didn't do that, and I think Joseph actually tweeted about this, where he was saying he converted those to deep in the money call options, which essentially I believe, and I'm not, you know, the craziest option expert, but it increases your upside by a lot, and then on your downside, I believe, like, if they expire worthless, or if it's like below your strike price, you just lose all the money. So that's actually way more bullish, because you're exposing yourself to way more downside, which is just you lose all the money. Additionally, in the event that Nike actually turns around and the stock continues to go up, you expose yourself to way more upside. So depending on what the strike price and all that type of stuff was with that, he could be making hundreds of percent, while Nike only moves maybe 50% in the next year or two, whatever the case is, whatever he believes in. One thing I should mention as well, while I have the portfolio up here, and I'm going to get a lot of flack for this, but I sold, you know what, I made a video calling MasterCard the never sell stock, but obviously we're here now, and I'll do like a detailed video talking about that later in the future. But I fully sold out of MasterCard, and I bought this company called Fiserv instead. Now, Fiserv is a very complicated business. They have 6 different segments, and 3 of them are similar, but then the other 3 are drastically different. It is a payments company, and I did a very long write-up over on my Twitter in the portfolio update of like what it is, why I'm bullish on it, all that type of stuff. The stock is in one of its cheapest valuations over the past couple of years, and I personally believe they have a very wide moat for half of the business. And then Clover, which is the bulk of the growth, smaller revenue percentage, but growing incredibly fast. It is narrower moat, but then at the same time, that doesn't mean that, you know, it's just some commodity airline company. You know what I mean? It's still a strong moat business on that front, in my opinion. So I sold out MasterCard in equal positions. So I sold half at 580, half at 582, and I bought Fiserv at a cost basis of 162. Now, again, I'll link this in the description. It's very long, but I go through exactly what my thought process was with it. And I don't really expect Fiserv to be like a super long-term holding that I hold on to something like, for example, Amazon, which I think I'm going on 3 years of holding it in my portfolio. Like, I don't think of it in that regard. It's more so that it's at such a cheap valuation, kind of like similar to, I guess, the Salesforce setup to a certain extent, right? Like, there's a growth scare, market sells it down more than it should, at least in my opinion. It's at a historically very cheap multiple. It is still a very strong moat business. I don't think there's much merit to the reason for the sell-off, and it's down like 30-35% off the all-time highs, right? So all these different things, and I'm realistically playing for a sort of multiple re-rating, which it's not repeatable, and I don't try to do it too much. Obviously, it speaks to my portfolio. Like, I would, what is this, like 90% of my portfolio is invested into like super long-term. I haven't sold any of these 4 ever, right? My top 4, I've only continued to add more to those positions over time, right? And so this one in particular, multiple re-rating, the company organically grows earnings per share at about 15 to 17%. And then another sort of attractive thing is that they're actually buying, I believe, about 7% of shares annually, right? So while we stay at these really low historical multiples, them being able to actually buy back more shares kind of boosts that EPS number more than their own guidance, right? Because when they issued their guidance, they were probably working off like a 4 or 5% buyback, because the company generally trades at cheap valuations, but not this cheap. And yeah, I'll just save the rest for when I actually do like a proper video. 2 weeks in a row, I opened a HIMS position. Now I opened a Fiserv position. So yeah, now I got 2 stocks to kind of do like a big due diligence video on and kind of update you guys. Again, I know I'm going to get a lot of flack for like selling MasterCard. It's such a great business, quality, whatever, this and that. It'll make more sense when I make the video. And honestly, there's a very good scenario where 6 to 12 months down the line, Fiserv is up 50%. The multiple has re-rated to 23 times forward earnings. I'm just making this up, by the way. 23 times forward earnings. MasterCard is like at $600 per share versus the $580 that I sold at. And in the event that that happens, I have no problem switching back, right? Because now I think Fiserv is like fully valued, while like MasterCard is not that much more expensive, and it's a way better company, right? Not way better company, but like it's a better company. So that's kind of my thought process with that. But yeah, we'll save it for another video. Finally, I went with the FinChat boys to the Toronto Stock Exchange, and we rang the market bell open, and there was a conference there, and Braden was speaking and that type of stuff. So it was quite fun. Definitely a very interesting experience having the confetti come down and you're kind of looking at it. So it was pretty cool. But yeah, I just thought to kind of throw this in at the end of the video here. It was quite fun. Anyways, thank you for checking this out. One more update I have for you guys, by the way, is this was my dinner the other day. For those of you listening, I had 8 quarter patties with mac sauce. So safe to say I'm very much dialed in. Anyways, thank you for watching this video all the way through. If you want to come hang out with me, I have a Discord server with 250 different members. Link of that's in the description. And then additionally, if you wanted to check out FinChat, the link of that is also in the description, where you can get a 2-week free trial, no card required. Thank you for watching and have a great day. Oh, Uber video is on the screen now as well, so feel free to check that out. Bye.